That with a $122 billion market cap, it is still way overvalued. Here to battle it out, George Antonopoulos, WallStreetEye.com president and chief investment strategist, and Mark Sebastian, Option Pit founder and COO. Mark, we hear the bells ringing behind you. First to you, George, because you're a bull on Facebook. You recommended it, by the way, here back in March when it was trading in the 20s. You were spot on then. But what makes you think it's still got room to move?
Thank you, David. What is going to move Facebook higher is the way that it's recognized its mobile device revenue platform. They've really just taken a huge bite out of all of their competition by monetizing their mobile revenue, and this was the big increase in their most recent research analyst report in July when they reported earnings, and that caused the stock to go tremendously higher. So it's really this focus on mobile monetization of their revenue.
Mark, everybody said, all of the analysts said, if they don't get that right, they're finished. They got it right. The market popped above IPO first and then above 50. Is it overvalued, and if so, why?
Well, I'll say it's definitely priced in. I think buying Facebook at this point is kind of like making a bet on the Chicago Cubs up 3-1 against the Marlins. The issue is the risk reward isn't there. That's the problem. These big momentum plays, it's like buying Apple at 700. It's like buying the NASDAQ at the end of the year in 1999. It's made a really huge move. We're now seeing in the option market huge implied volatility increases on call options, which means speculators, usually retail traders, are betting on huge move up for Facebook. That's never a good sign. It's getting toward the irrational exuberance level in that stock.
Well, to that
I'm never
point,
a fan of these
let me go back to George. To that point, $122 billion market cap. That, by the way, is larger than Intel's market cap. And we know Intel's been around for decades, an established company. Does Facebook really deserve a market cap bigger than Intel's, George?
I think they do, because in the post-PC world that we're living in now, everything's going to the cloud and mobile computing. Everyone's going to be on their mobile devices, their pads, their iPads, their tablets, and this is where everything is shifting. We're having a fundamental shift. And to Mark's point, I agree. It has gotten very pricey as far as a price-to-earnings ratio benchmark. However, if Facebook can continue to beat Wall Street's earnings estimates, that will cause the PE ratio to come more in line with that of the S&P 500.
Mark, what about that? What happens? We're going to get their earnings a little later. I mean, if they blow out expectations once again, would you admit you were wrong?
Yeah, I mean, if the stock goes to 60, of course I'll admit I'm wrong. The issue is, I think the upside on this stock is maybe 53, 54 bucks, and the downside is right back to 40. Listen, long term, it's probably a good play. The problem is stepping in with this market cap right now in front of an earnings announcement. The risk reward isn't there. If you like the play that much, go and sell with vols this high, go and sell out of the money puts and try and get Facebook for 43, 42 bucks. And if it keeps rallying, just collect the premium. I just can't justify buying Facebook here a month ahead of earnings for a market cap of $125 billion for 51 bucks a share.
Well, and George, you were right about the fact that the mobile ad space, they did very well there, but they're not alone there. You have Twitter now announcing their new plan with the NFL to get on that. And there's a lot of competition for that mobile ad space that might hurt Facebook.
You're right in that the competition is increasing. However, that validates the premise that Facebook, Twitter, LinkedIn, a lot of the social media darlings will continue to benefit from this, and advertisers cannot ignore Facebook. Facebook comprises 25% of all online avenue revenue. So Facebook truly has the lion's share of this market space, and Twitter will only make that more justifiable for Facebook. It will only complement the online advertising revenue that will inevitably come to dominant players such as Facebook, and Twitter and so on. So we think it's a good thing.
Mark, you know, one thing that I had been skeptical about regarding Facebook is how fickle its demo audience is, particularly people of my daughter's age, for example. But they have managed to hold on to that demo. So far, everybody else who's tried to come up with a competing product to pull away that market share has failed. Doesn't that give you hope that maybe Facebook does have a corner in the market?
Well, you know, 3 to 5 years out, does it justify a $250 million market cap? Who knows? Probably. Now, probably not. And so, you know, these moves, just like Google, they move in cycles. And so, just like Google, there are periods of time where it was really, you could opportunistically get in at a value relative to what was in front of you. Yeah. The fact is, the clarity just isn't there for Facebook at these levels.
Okay.
At $40, I'll take it all day at $40.
Okay.
$50, I think it's a little too rich for my blood.
We debate, you decide, folks. We leave it up to you, the viewer. George Antonopoulos, Mark Sebastian, great debate on Facebook. Appreciate it, gentlemen. Have a good weekend.
Thank you.